So, what are your forecasts for 2014?
Forecast for 2014 counts on a positive performance, a rather satisfactory performance for equity markets. We think in particular that European equities will be the best performing equity market. We expect European earnings to grow something like 10%, and that would also mean that the European share prices would move up to the same extent. We also expect positive performance coming from the United States. However, earnings growth there will be slower than in Europe, and that also means that the market will move up less than in Europe. Within emerging markets, it will be more dispersion. Some markets doing a bit better, and then other markets being more of a laggard. Markets we would particularly look at in emerging would be China and Russia.
Regarding the portfolios, what would you suggest to an investor?
Well, the first thing as a general rule is that an investor needs to determine, am I investing for rather short term, say on a calendar year basis, or am I investing for the longer run? When you look at it from a calendar year basis, I think attractive opportunities can be found in European equities, can be found in certain emerging equity markets, in high yield bonds, and also in emerging market bonds. I think that European government bond markets will see a rise in bond yields, and that means that if you would buy a bond today and you look how much that bond is worth by the end of 2014, that the performance there would be rather unattractive, because of the fact that we expect that bond yields will move up and European bond yields will move up, because of the fact that European growth will accelerate, and also because of the influence coming out of the United States, where we also see a rise in bond yields. If you take a slightly longer horizon, then I would say, again, look at equities, but you have to be aware that 2015 will be a more difficult year, because then all of the market focus will be on the timing of the first rate hike in the United States.
My last question is, what's your view on Italy?
The view on Italy is that we have to make sure that that GDP eventually declines. So that means that we must have enough of a primary surplus for that GDP to go down, and we also must make sure that to get to that objective, that the long-term economic growth rate of the country goes up. Economic growth on average since 2000 and even before the crisis, before the recession in 2008, had been rather low, and I think the effort should be on boosting long-term economic growth.
Thank you for your time.
You're welcome.